Hello everyone, I'm Niaz. In this video, I'm going to explain you about my trading model, which has given me the first taste of profitability in the forex market. I trade two pairs, Euro USD and GDP USD. I trade based on liquidity and inducements, and then I wait for the market to sweep a certain inducement and then go to the opposite direction. It's basically a reversal model. I also have a continuation model. In this video, I'm going to tell you about the reversal model. Let's get on with that. What are the things you should know before you get into this video? You have to know basic market structure. You have to know basic market structure, higher highs and higher lows. You've already probably seen many multiple YouTube videos that teach market structure. Go on, listen to it, get to know that, and then come back here, because this is going to be a little bit of advanced liquidity concept. Let's get straight away into the charts and let's see what happens. I'm currently in this position. I'll reveal it later. I'm going to explain you the model. First, let's say we are in a we are in a bullish market. The market is creating higher highs and higher lows. Okay, the market has created a new high. I'm going to wait for the market to do a little bit of pullback and wait for the pullback to happen, and the market should be below the fib. You know the fib, right? The market should be below the 50% of the range. Once the market is here below the 50% of the range, I want to see there are two types of demand zone I mainly qualify for. A demand here, which will be a decisional demand, because this demand would have led to the will go like this. This demand would have led to the break of structure of the external break. These are internal trends, right? I'll change the color. These are internal trends. This demand has led to the break of the external structure. So this is a decisional demand that also holds a good power, and we have the extreme demand. Okay, let's say we are here during Monday. What I'm expecting is Monday to go show a little bit of reaction for decisional demand. Maybe we'll form structure like this, and then we'll sweep this lows, and Tuesday will be the Tuesday, and then we'll chop around before the New York Open, and exactly at New York Open we'll get a good trade. Why? Because I've traded the market for the past 3-4 years, and then that's what I've found, and many people have helped me to find that. Thanks to them. Okay, let's see, here we are here, and the time is 8 o'clock New York session or 9 o'clock New York session. 8 o'clock is the New York session, and 8, this is UTC4, you have to keep it New York session. 8 to 11 is what I trade, around 3 hours. I don't trade like other time frames. I'll get into this here. Let's say this is our Asia session. I will keep it as this is our Asia session. The market is a little bit ranging towards that Asia session, and the London session will do more or less opposite to the higher time frame trend. Higher time frame trend is bullish, and then we are in we are showing a bearish momentum during London session. What happens during New York is the market will consolidate or start before New York. When the time hits, the market will dive deep into the extreme demand. This is a huge demand. This demand, the bias from this position has led to the break of structure of this one. Yes, the market will do it then minor structure shift here with imbalances, and this is where I enter, and I target minimum of Asia high, or sometimes I'll hold up to the extreme high based upon the market condition. Let's see what happened here. This is Asia session, and this will be our London session. Let's say it's and this will be our London session. What is happening here is the market not only reaches our extreme supply zone, it also reaches our it also got London low liquidity. There are three types of liquidity I want you to focus on. It's going to be minor liquidity, which I'll tell you, and medium and major. There are three types of liquidity, very important. Minor is, let's say we are in a 1 minute time frame. We do something like this. We do a little bit of build up, and then we take this low, then push higher. We have build up, inducement, push higher, break of structures the opposite direction. That is minor build up in 1 minute time frame. Whatever that is happening in 1 minute, 3 minutes are minor structures. That will be used for confirmation but not creating a bias towards it. Okay, we'll go the medium. Sorry, we'll go the medium. Sorry. Okay. What is the medium inducement? Medium inducement, I have 3 medium inducement types. One is daily highs and lows. Daily highs and lows. Second one is session highs and lows. Previous session highs and lows. And 15-minute structure highs and lows. Highs and lows. Let's get to here. See, I have categorized for you medium inducement. Sorry, that's measure. This is the medium inducement. Inducement on 1 minute short term. I've got an example for you right here. See, this is the 1 minute time frame. So Euro USD 1 minute time frame. You can see I've zoomed in. Build up. We have the inducement here at this right position, and then we fell. We had a build up and then inducement of that, and then fell down. Then we have build up of these equal highs, and then we induce that and then push lower. Sellers were in control. Control number 1, control number 2, and control number 3. And sellers are getting a little bit of exhausted, so they have build up here and then induce and then push higher. And see, there is a difference between inducement and liquidity. If there is no proper break of structure with fair value gap, then it's not an inducement, right? See, in every single time you can see a fair value gap here. Here we have strong candle, but okay. Here we have a fair value gap. See, exactly after taking out this liquidity, we have a fair value gap, and then we push down. What happened here? We took out this liquidity, and then huge 1 minute candle, we pushed higher. And what about medium inducement? I told you, a medium inducement consists of daily highs and lows, session highs and lows, 15-minute structure highs and lows. You have this clear trend line liquidity here. This is a major move. This is because of some unemployment news, I guess. But even before that, we can predict the market. In London, exactly what happened in London, sellers were in control, right? You can see here. We sweep the London high and then gave a change of character in the 5 minutes. This is in 15 minutes. We got a change of character in 5 minutes and then get tap in entry exactly at the New York Open. This is I have a custom indicator which says timings of Asia, London, and New York. We have 5 minutes change of character, and then we got an entry mitigation here, and then we continue. See, imbalance. What happened here? We have Asia build up, and we took the Asia high, and then we consolidate a little bit, and then we fell, right? And then we got a mitigation at the New York time, and then we change of character in 5 minutes, and then another entry here, and then fell. What happened here? London. See, London is most likely to do the opposite movement. London is mostly used for pullbacks. See, we swept the Asia low. Even though we are selling, we are in a downtrend market. We took the Asia low and then showed a bullish momentum to reach this supply zone, and then we started to fell again. Exactly on New York Open. See, this is an imbalance. This high also took out the Asia high on the left side, right, aligning itself to the market structure because we are on a selling market. And then the market can come into this fair value gap, this supply zone, and then continue to fall. Also remember, this is a Thursday, I guess. We have these equal lows, Asia lows, and daily lows. This was previous day's low. What happened on the last day? We took out Asia low before London, and then gave a change of character at the beginning of the London, and then we continue to push higher. And then what happened here? We had a little bit of consolidating here, inviting in sellers from the Asia highs, and then what happened? We gave a change of character to the upside, and then continued high. We took all this trend and liquidity. Sellers were in control up until this point. We have reached some form of demand here, and then they gave a change of character. We can also predict this in 15 minutes. We don't have to go for higher time frame H1 or H4, something like that. We took the previous day's lows, and then we gave a change of character with the momentum, and then we continued higher. This is a perfect textbook example. You can go and look at it. This is I don't know the particular day. I'll tag you. Okay. Then comes the major inducement. This doesn't happen often, but it happens at some point, like once in a week, once in a month, something like that. These are inducement of H4, H1, and daily structure points. We are We are on H for GBP USD. What happened here is this was a supply, this was a demand zone. So we got an inducement, and then we pushed higher, and then we got these highs. Okay, then sellers started to gain control. We were making lower lows, lower highs, and everything. And this was a demand which led to the push higher. After this inducement, which have already taken out the higher high, the purpose of that demand is fulfilled. So there will be a lot of liquidity below this. Once you take this is a H4 structure, right? Once you take out this and then see the momentum coming in, so good. So that's why it's named as major inducement. These are the three inducements I use. I use these inducements to give me a good entry. I'll show you example right now. I'll go a little bit here. Today is October 15th. I'll show you trade right now. The market structure has changed bullish from this point. We were in a selling market. We were making lower highs, lower lows. This high was supposed to make a lower low, but it failed and then showed bullish momentum, and we got change of character to the upside. So what happened today? Yesterday the New York pushed higher. Then what happened in London? We took the previous day's lows and then gave change of character. In New York we got a good trade, pushing higher. Today what happened here is we had London formation here. We didn't do much about it. And what happened? We took the London low and then we gave a 5 minutes change of character to the upside. You can enter in any fair value gaps here. I prefer to enter at this particular order block. Okay. If I entered here, my stop loss would be below this. My target should be above this. Because in a bullish market, I'm expecting the market to form a new higher high. That's it for the video. If you like it, please do like and share, subscribe. If you need any more insights, please do leave a comment. Thank you for watching. Thank you everyone.